All right, three, two, one. And good morning and welcome to the August WASDE Crop Report. My name's Sterling Smith and joining us is Brooks York. And we are going to go through what should be an interesting crop report. Typically, we do see some changes in yields, particularly for soybeans on this report. And we have, excellent crop conditions coming into this report. We don't have excellent prices, Brooks. So tell me, down in Southern Illinois, how are the markets looking locally?
Markets locally, basis continues to fade. I mean, you know what futures are, obviously, but basis levels just continue to go down every day. It seems like down here, uh, there's not a huge supply of old crop beans coming in. It's big. There's still piles at facilities. They're being picked up right now. But Sterling, what's pretty amazing is the old crop corn, not only that is coming into the market, but sets in the bins right now that will probably set through harvest. This is going to be something that it's not unprecedented, but certainly rare. Basis levels on old crop look a lot like new crop. They faded out. One thing we said right before we officially opened, there's not that urgency for anybody to buy right now. It's kind of like we can't see the line between old crop and new crop, where year in and year out, we see maybe that early premium for harvested corn and beans here, especially in August, first half September. It's like we're in harvest in August right now.
Right. And part of that, I think, particularly with soybeans, well, and corn too, the size of the South American production, that size of production in Brazil has changed, the market dynamic a little bit. Usually this was a flat spot in the wheel. And if you were lucky to have corn this time of year, you'd see a premium because somebody would need corn. Right now, the globe is willing to be hand to mouth in buying this stuff. And without that urgency, there isn't a lot of things to pick the market up here. We
Yeah.
do have some things going on, technically that we can look at here. If you like, particularly with the November soybeans, it's a little bit interesting. And here, why don't we do that here? Here, let's at least bring hope into the picture. How does that sound?
Hey, I don't think we can start any more negative. So let's see if we can turn it around just a bit.
Well, I'm hoping we get a little bit of a special sort of behavior coming off of the report today. But this is a chart of November soybeans. This line right here is $10 a bushel. We're at 9.94 and a quarter. We have pushed through that $10 level, which is a little unusual. I mean, we're now getting into the land where beans are now turning officially cheap, really, for the modern soybean market. Looking at the stochastics, we have the percent K is at 7.59. The percent D is at 13.10. The lowest these things can go is 0. Okay. So we got one that's 7 points from absolute 0, and we got another one that's 13 points. This is deeply oversold territory. The RSI isn't quite as deeply oversold, but we're plucking around at about 30.4, which is low. And this picture is, how much lower can we push these is really the question. And where does that big fund short start to get covered? Those are
Sterling.
the real things that can drive us.
So let's look at this historically. And I don't have the charts up here. If you want to follow along, you can, or you don't have to. But we really have to go back and we have to think about when were our estimated carryouts. And I'm going to talk modern era. Okay, I'm going to talk the last 6 to 7 years, as big as they are today.
Are we going
And
to do
we've got to
corner
go back.
beans, Brooks? Corner beans, corner beans.
Let's start with beans. We'll do
Okay.
both, but since we're on beans, you got to go back to 2020. Okay. And in 2020, these WASDE reports estimated big carryouts. Now, they did not come to fruition, but we had carryouts north of 600 million estimated on soybeans. Okay. Again, we didn't get there. We're going into this report with the estimate of 435 million based on the last month's WASDE. We'll see where that comes out. We saw prices down around 850 NOV futures that year. So Sterling's got a chart of it up here. 2020. I don't know if you can illustrate that one.
Yeah, I sure
Sterling.
can here. Hold on. Let me get over here. 2020 is this line, is this green line right here.
That's 19, I think, but maybe,
Oh, well, actually, there's 2020. There
yeah,
you
go to
go.
white. So we had, you can see the 600 million there where we topped it. It came down tremendously. About that time, the coinciding futures setting around 850 Nov. And I'm sure Sterling can hit a couple of keystrokes there. That gives us some glimpse into how low can we go. Now, we've got inflation to take into consideration. We've got that demand curve that continues to be stronger and stronger. But to Sterling's point, we're entering cheaper territory. I don't want to put a
Yeah.
number on that, but Sterling, what comparisons can you draw to when the sky was falling in 2020 to today's number?
Oh, let's take a look here and let's see where the soybeans were in 2020. Let's just do this and put this up here. Now, the other line that I was highlighting was our analog year, and that was 2018, and we don't want to talk about that just yet. So let's get, oh, here's 5 years. So 2020 would be right there. We saw prices, oh, right around $10 a bushel. We had come in with lower prices and we started to work our way higher.
Kind of see that white line there dipping down to what, around
Yeah,
850. I think that's what
yeah,
I researched the other day,
yeah,
and then
yeah,
pop
mhm,
up. And 10 is kind of hidden on there, but you can kind of see
yeah,
where it's at. But
yeah.
it kind of gives you a, uh, I don't want to say that, don't want to say it's false hope. We could always trade lower, but we got some clues out there, Sterling,
Yeah,
that
yeah,
maybe we're close. One of them you talk about every Friday, and that's spec fund position.
yeah.
So spec funds seem to have exhausted the short side. Who have we got left standing to sell this crop?
Well, actually, we have farmers who have crop, if they have crop in the bin, that is a particular problem. Now let's take a look at this fund position though, because they're more likely to do something immediately here and give us some, immediate gratification. So here is the current fund short position for the soybeans. Please ignore the writing on there. It's a bug. We're not short 14,000 contracts. We're short 164,000, which if you look at this for the last 5 years, this is the shortest we've ever been coming into this season. And I'll tell you what's driving this. Soybeans, good to excellent, last week was 68%. Just off the chart good number. I just sent in my guess for what they're going to be today, and we're at 67% good to excellent.
Yeah,
So we are looking at a really good crop.
you know,
Same story with corn. And the other one that's slinking under the radar here, spring wheat is 74% good to excellent. We are looking at record spring wheat yields as well.
you know,
So
historically speaking, on this crop, these crop conditions, we don't see beans historically tail off from this point into finishing. It seems when we get to this point on beans, they stay pretty stable. Corn, on the other hand, if you look at corn ratings, we do see a little slacking on corn conditions as we kind of hit that first week of August. They tend to tail off a little bit. But to Sterling's point, beans, when we're this good this late in season, for just historically, if we looked at the last 7 years, they stay pretty strong. And
they,
Sterling, you're raising your estimate today. We're
yeah,
coming
I
into this
pushed,
thing with an expectation of 52.0. What
right.
is your
I
call?
raised my yield 9/10 of a bushel, which may prove to be a little bit light. Historically, on this report, we have seen raises of 1 to 3 bushels an acre. Okay, kind of depends on where we are on the baseline idea. So I'm guessing that, but we've seen them raise yields subsequently in September and October too. This is not unusual. Looking out my window, we've had a cool off in the weather, which has relieved crop stress. We've picked up rain. It's going to rain some more all week. This sort of rain, I can hear those soybeans, and there's fields about 10 miles west of me. And I can hear those beans right now getting bigger and fatter because beans have a way of getting bigger and fatter as we get towards the end of the season. And this is weather that is a little atypical getting rain like this. Normally, it does not rain in eastern Nebraska in August. And if we do pick up, reasonable amounts of rain, that's enough to send this crop, a little bit into overdrive here. So let's go ahead and take a look at what we are exactly, what the expectations are for today's, today's WASDE report. And let's get down here to the U.S. Old crop ending stocks at 1.876, so that's about the same. Corn exports, no real ideas. Corn production is expected to be a little bit higher. The guess yield is 182.17 from 181. In my opinion, that may be a little bit aggressive just yet. I did raise my corn yield a little bit. We're still in record territory here. So how much elasticity we really have on the upside, kind of need to think about that because that may be a little bit different. Moving on to soybeans. Last time around we were 52 even. Average guess is 52.5. I put mine in at 52.9. Historically, we've seen a 4 to 6/10 increase on the August report of soybean yields, but in years we actually increase them. The average increase is 9/10. I know with conditions where they are, an increase seems invariable. I don't think they're going to be willing to push it this much just yet, though, because of the difference in planting time. But yeah, the expectation is that number is going to go up. Looking for soybean ending stocks from 435 to 466. That is not that's a big number, yes. It's not an enormous number, though. It's not that big of a change. And any little uptick in exports can, help negate that. So maybe we finally pressured things to the level where they're too cheap. Now, corn ending stocks, 21.19 at 20.97. I had corn ending stocks basically right about the same. Yeah, I increased yields. That pushed it up. I increased exports from old crop a little bit to kind of offset that because we have seen the ever so slightest, and I do mean slightest, uptick in exports here recently.
Yeah, Sterling, I think globally, the only thing, and we talked about the recipe for a rally back 60 days ago. And one of the things we talked about were deteriorating crop conditions. That has not happened. The other thing we talked about was can we increase usage? And about the only place we could look for is exports. And we did just a little bit on old crop corn. There is a smidgen, a fear factor that Ukraine has got some crop conditions, but we have no idea what we're looking at there. Is it 50 million more? Is it 20 million more that would add to U.S. exports? And what I'm saying is any bushel that's not produced by Ukraine probably comes out of U.S. export tallies at this point in time. We just don't know. And of course, there's a lot of geopolitical strife over there. Sterling, you and I talked a little bit about this earlier. What's going on there?
Well, we have Ukraine actually fighting in mainland Russia. They have invaded, which when you attack another country, that is to be expected. What I find interesting in this whole scenario is we've seen nothing of the Russian Air Force. And this is all it's not how I would expect this sort of battle to play out. Moving back to corn exports, so we have December corn below $5, or below $4, excuse me. And maybe that will create a little itch in the commercial offtake. Again, I'm the procurement guy at Mondelez. We're below $4. Do I want to explain to my boss why I didn't buy the corn below $4 when it's trading at $4.25? Yeah, I'd rather have the conversation. Well, look, I bought it at $3.94. I'm sorry, it's now trading at $3.81. We'll buy some more at $3.81. I'd rather have that conversation than the why didn't I buy it. So maybe we're getting to a point to where the cheap prices will at least create some stability. The stability will create some nervousness in the fund community where, A, we're done making money on the downside. We can get that snowball going.
Yeah, and Sterling, take us through that. You walked us through an illustration of a buyer, physical buyer. Take us through a fund trader who doesn't know what corn and beans look like right now. They probably they're setting on a short they're comfortable with. There's
Well,
probably
we're
not a
at
lot
life
of
of
urgency.
contract lows right now.
Yeah.
So that means inherently, if you're short, you're profitable, guaranteed on every single position that's short.
So what's the
So
mentality
he's
right there?
he's looking at a chart. He's thinking football season's starting, so he's working on his fantasy football draft. And he knows his Christmas bonus is coming. You get paid on the profits you book, not on the profits that are floating through midair. So if I were him and I'm sitting at life of contract lows, anything to give me impetus that we're not going to be making fresh lows, I'm going to start peeling that position back. What I'm going to do is I'm short. I'm going to sell at the money puts. I'm going to start doing things to bring in a little more revenue and not push this envelope up. And here we have a report. And let's see
Positive
what we have
corn.
here.
I'm looking at
Corn
corn.
ending
Oh my
stocks
gosh. The
2073. That's a little better
bean
than
ending stocks
expected.
are monster.
Well,
The
the
bean
bean
ending
ending
stocks are
stocks
monster.
560. Woo hoo hoo. Corn yields at 183.1. That is way out of bounds. Soybean yields per acre at 53.2. Again, huge. That's huge. Let's see, wheat yields per acre at 52.2. We are seeing the oh, look who got everything right. 52.2, a little bit above expectations. Cotton ending stocks, so here may be some good news for a market that needs it badly. At 450, that is a bit of an improvement there.
Wow.
So this is definitely beans right now are down. November beans at 981, that's down 20 and 21. Even with the corn being a little bit, we'll call it neutral at best, with the beans getting sacked, you're not going to get a rally in the corn. We're at 391 and a half there. We're down 3.5. Board wheat at 533, down 9.25. KC at 545 and a quarter, down 8.25. So again, we are pressing and making fresh lows. So the next thing we'll watch, we'll see if we can maintain it, because the report has its instant activity, and there are funds and traders who are wired into this thing. As soon as those numbers hit, the market moves. We may very well see, when it gets more assimilated, we may very well maybe see some buying. But again, no urgency to buy, and we didn't do anything to help the urgency here.
No, I think that bean carryout number again, go back to 2020, you see it above 600. That's a huge jump. That 467
well,
in the left
the good news is
category,
we're
that
at
was the
560.
anticipation. We're at 560 now. So think about this. We went from 435 to 560. The estimated guess on the screen here is 467, 466.99. That's a huge jump. Yeah.
Yeah, because even with my bump, when I bumped yields, I also gave a little smidge back to improved exports, which we did see, and I gave crush a little bit, because we are doing one thing we're doing really well is we're exporting soybean meal like we never have before. I mean, when you look on the Thursday export report, look at the accumulated soybean exports. We are way above the curve, and that's a new thing that can help. But they can only crush so many beans so fast. It's not
Yeah.
like loading them on a boat. So that is one good point, but that is again not really. And here, if you look at these export inspections from this morning, these numbers are terrible. The corn was way below what the
Yeah.
guesstimate was, and the soybeans at 326. Well, they're an improvement for last week, but that's still not very good for this time of year. And that measures, that's really a measure of export demand in real time. That's what that lets you see. Corn
So Sterling,
production.
are you surprised that beans aren't down? I mean, block out spec funds, take out everything. If we got that news by itself, and spec funds were not sitting on the empty, how much does that move drive the market down?
Well, here's the thing. I don't know that funds are willing to pile in here. What I think we have here is a no bid situation. Anyone who's a buyer, put your hands in your pockets, go walk around the building, then you can come and think about buying it.
I think you're right.
Because I don't think if the funds were in here hammering it in this situation,
Yeah,
you'd be down 35, 40 cents.
I think
So
you would
they're
too.
not willing to press it as much as they are. If no one's willing to buy, well, I'll throw out, if I'm a 50 lot seller, I'm a 5 lot seller if I'm a fund down here.
And
I
to
mean,
your
that may very well prove to be fast money. I sold 5 here and I'm going to buy them back, in the next 30 minutes.
point, the funds, like I said, they're walking around the building right now with their hands in their pocket. They see
Oh,
something right here. They see
yeah,
something right here. Am I going to
yeah.
be patient and let the commercials and the farmers drag this thing down over 60 days? How much can they drag it down? Or am I going to start buying these positions back? And I think
Well,
that's kind of the question. We'll see today. I think we'll see
well,
it today.
we'll see if they buy the position back. Here's the thing. Let's say I'm a hedge fund and I'm short 3,000 cars of November beans. Right now they're at 983. I would sell some 980 puts against that. Take the premium. I'm going to get paid. I'm going to get paid well for it, and see what happens. If it goes down below that I make money on my short, and my put situation is I know I'm out of the market at 980. That would be with where the volatility skew is right now. Probably what I'm doing, just not looking at things. So they may not be in as big of a hurry to cover this. Simply, it depends on the level of sophistication, and that varies widely from fund to fund.
Sterling, I'm going to kind of address something that I'm getting a few calls on. Okay. There are parts of the country. Well, I was in the Carolinas last week one evening, South Carolina, right in the middle of their harvest averaging period. North Carolina starts September 1st. There's places where yields have been affected to the point when we look at projected prices, the certainty of a claim is there. We just don't know how much. Now, close your ears if you're an agent or a farmer that does not have a yield issue. Okay. You got to close your, especially if you've got good yields. But if you know your crop is at or below APH, and there's some places in the country, we know with certainty that's the case, really all the way down that southeastern coast, it's been tough, especially on anything planted early that's non-irrigated. We can't lock in insurance money, but we do know this. If the market rallies from this point on through the end of your averaging period, it certainly takes away what could be a decent indemnity. At the same time, if you had bushels, it increases their value. If you don't have the bushels, it doesn't. Sterling, if you were going to protect corn in this situation and buy a call option, what strikes would you look at buying here? Now, when I say that, we got to be careful putting a big disclaimer out there. Only for areas that we know have yield losses coupled with this price loss. We know the price loss is there. Okay. If we're doing that to protect that indemnity, and we got to look, probably the market's hovering around that 390 range. December futures, December strikes 410, probably in that time range, maybe 420s, 8 cents, I think, earlier this morning.
Yeah, here we'll pop them up and see where they are right now here.
And the concept's pretty simple. What you want to do is you want to try to get out of these as your averaging period plays out.
Okay. All right. What I would do here, the $4 call is 13 cents. That's not that big of a bargain, to be honest with you.
See where that 410's at. Looks like it's about a
410.
dime.
410 is at 10 and 5/8. The 20-cent is at 7 3/4.
I like those latter two. And again,
Yeah.
got to know what you're doing with this. This is in areas only affected by that. But a lot of farmers, a lot of agents are asking that type of question right now.
Yeah.
That's your safest bet when you're the buyer of any option. When you're the buyer of a call option, your risk is known up front. So in other words, that 7, that 10, that 14 cents that we just quoted is your total risk. Okay. If the market falls, you can lose all of that. Hopefully that's where insurance is making things up. If the market goes up, essentially the value of your premium for those call options goes up, and what you're paid out in crop insurance is affected by that harvest price. So essentially in that scenario, it could go down. Just an idea to be thrown out there.
The implied volatility on these is pretty low. It's 21%. Actually, it's 20%. And put call parity looks to be, these options, while nobody's bargain, do appear to be relatively cheap. If you're a more sophisticated trader, you could buy the $4, you sell the 420 against it, you got 20 cents protection, you're paying 6.
Yeah.
That may save you a little bit of money, because honestly, could we get back to 420? It could happen, but the Cubs could also manage to win the wild card, and the White Sox could manage to have the worst record in baseball history.
I'm not
All
going to
these
bet
things
against that.
could happen, and they're all about equal probability, except the White Sox. The White Sox seem like the safe play here.
Yeah. Sterling, do you care to flip it on a current futures? You may have it on there, and I just can't see it. But
Here's the December corn futures right now. Now, folksies, here's our free education for the day. We made our spike low. Our spike low was at 390 and a quarter. That was a new life contract low. Now we're trading at 394. We have found a little bit of buying here. Now, if we can finish, in this general area, right, right about where we finished Friday and where we started today, and if we can trade higher with the stochastics and where the RSI is, that gives us some potential of a bullish signal where we're seeing, the guy at Mondelez, well, I don't want to explain why I didn't buy it below $4, and maybe they're in here buying a little bit. And maybe we can start to spark the people on Wall Street to maybe, well, I really want a new Ferrari this year. Maybe I need to cover some of this. And that can push us higher. And there we've just ducked into the green, just a little bit. So maybe with the corn. Now, the soybeans, remember, if I'm a fund, I'm probably short both of these bad boys. So if I'm going to cover one or the other, based on this report, my inclination would be to cover the corn first. The soybeans, because I imagine these guys, they look at the same data on Bloomberg that I look at. And I'm sure they're thinking that they can, I'm sure they're thinking, well, maybe we can get these a bit lower. But again, the other question you have to ask, how much lower can I really make it? So,
well, I'm curious. Nobody has used the chat box out there, but in your areas, are you seeing more old crop corn or soybeans remaining in the bins? That's a question. If you guys don't care, just put corn or beans in the chat. I'm inclined to think there's more corn because soybeans gave us a few opportunities. We've got the action indicators that are out on Thursday and Tuesdays and Thursdays, and they haven't told us anything for weeks. However, if we follow them back a year, we would see many more opportunities on soybeans.
And the inclination is when you get the soybeans, you don't really want to store the beans. You want to move them out anyway, because there's decay issues. So I would think, there's not much reason to be sitting on too many beans right now. There's plenty of reasons to sit on that corn.
I would guess there's probably more old crop corn in the countryside nationwide, which is kind of a unique perspective when you think about it from a spec fund side, because there's a little bit more pressure probably being put on corn than maybe beans from the farmer over the next 30 days. Well, Sterling, I think we've got the news out. Beans just kind of stagnant. They feel pretty comfortably being 20 cents lower. We'll see what the day brings. Corn, I don't know if you call it a recovery, but somewhat of a recovery.
That's a recovery. If you're short and you're short at the wrong price, it's a recovery. Trust me. Couple of housekeeping notes. Tomorrow at, I believe it's 11:30 Central Time, I will be on Ninja Trader TV talking about this report and everything else that's going on in the macro market. So if you want to tune in on that, that's free of charge. Just Google Ninja Trader TV. And make sure to read today's DMO, as we'll have a breakdown of all the details of this, and we'll see where the prices actually finish.
Yeah. Well, stay tuned. This will be an interesting close today, and the next couple of days may provide a little opportunity for some folks that don't have anything sold. Back to our basis discussion. as we go north, old crop basis is fading fast. If you've got customers that have to move corn out of the bins, get that basis set immediately. We're already seeing it fade where I'm at. It's going to fade as we go north into new crop values.
But it's going to fade. It's going to sink like a. I hate to be the bearer of bad news. Brooks, you and I both know the elevator game.
Yeah.
You're full. You're plugged. You're dumping in the parking lot. You're not going to pay up. You just can't. And that's just how it is.
We could see some short-lived, extremely weak basis levels, and
Yes.
maybe unprecedented. So keep that in mind. Make sure that at least for that 2-week period, you look at that basis because it can be ugly. Bright side of things, if you are on a rail network that feeds the Southeast, you might see some opportunities early in harvest that we rarely see throughout Ohio, Indiana, and Illinois. So what's your CSX, what's your NS bids out there? You may see something there that surprises you at a location that you normally don't attribute to really strong premiums in early harvest. That Southeast, there's going to be some shortage on corn bushels down there. There's going to be some interested buyers, especially at these levels. So don't rule out looking at those bids.
Yeah. All righty. Well, I think that's all I have for today.
Very good.
For those of you up north, I think I'm going to be on the Red River Farm Network here in about 10 minutes talking about the report so you can get a replay.
Very good. Everybody have a great day.